So what exactly is Bitcoin, and why does it keep popping up everywhere? From news headlines to conversations at dinner. In this video, we're going to break down the basics of Bitcoin in a way that's easy to understand, without any confusing tech jargon. Whether you're totally new to the topic or just want a clearer picture, we'll cover what makes Bitcoin unique and why it's got everyone talking. Let's get started and decode the hype together. Bitcoin is basically a digital currency. Think money, but without any coins or bills you can hold in your hand. It lives entirely online and isn't controlled by banks or governments. That means you can send or receive Bitcoin from anyone, anywhere in the world, without needing a middleman. It's like having your own global wallet, totally independent from traditional financial systems. Let's talk about how traditional currencies like the euro, dollar, or yen work. These are managed by big institutions. Think central banks and governments, who make decisions about how much money gets printed and how it's regulated. They're basically the referees of the financial game. But Bitcoin flips the script. There's no central authority calling the shots. Instead, it runs on a decentralized network where the rules are set by code and agreed upon by its users. Let's talk about the blockchain. Basically, it's the backbone of Bitcoin and a bunch of other cryptocurrencies. Imagine a digital ledger that records every transaction, but instead of one person keeping track, it's shared across thousands of computers. This setup makes it nearly impossible to mess with or fake a transaction because everyone's got a copy and checks each other's work. Thanks to blockchain, Bitcoin transactions are secure, transparent, and don't need a middleman like a bank. It's a game changer for how we think about money and trust online. Let's break down how blockchain actually works. Imagine a digital notebook where every transaction gets written down in a block. Once a block is full, it's locked and linked to the previous one, forming a chain. This setup makes it super tough for anyone to mess with the records, because changing one block would mean changing all the blocks after it. That's how blockchain keeps transactions secure and helps prevent fraud, all without needing a middleman. On the blockchain, every transaction is out in the open for anyone to see. But here's the twist. While the money moves are public, the people behind them stay hidden thanks to cryptographic addresses. This combo of transparency and anonymity means you can track where the funds go, but not who's sending or receiving them. It's a bit like watching a chess game without knowing the players. That setup has sparked some controversy, since it's attracted both curious innovators and folks looking to keep their activities under wraps. Think of blockchain like a giant public notebook that everyone can see and update together. It's constantly refreshed in real time, so the information stays accurate and up to date. The cool part? You don't need a middleman, no banks or brokers, because the system checks itself. That means transactions are reliable and transparent, making it easier to trust what's happening without relying on a third party. So, you're curious about getting your hands on some Bitcoins? Let's break it down. The first way is buying them on a cryptocurrency exchange, which is basically like an online marketplace for digital coins. Another option is mining, where you use computers to solve puzzles and earn Bitcoins as a reward. And finally, you can accept Bitcoins as payment for goods or services, just like you'd take cash or card, but in digital form. Each method has its own perks and challenges, so it's all about finding what fits your style. Buying Bitcoin is actually pretty simple. You can trade your euros or any other currency for Bitcoin, even if you just want a tiny piece of it. Unlike traditional money, Bitcoin can be divided into really small fractions, so you don't need to buy a whole coin. This flexibility makes it easy for anyone to get started, whether you're investing a lot or just testing the waters. Getting paid in Bitcoins means you receive digital currency instead of regular cash when you sell something or offer a service. While this practice is still pretty rare, it's slowly catching on as more people get comfortable with cryptocurrencies. Some businesses and freelancers are starting to accept Bitcoin payments, seeing it as a way to reach new customers or avoid traditional banking fees. But keep in mind, the value of Bitcoin can swing wildly, so what you earn today might be worth more or less tomorrow. It's an interesting option, but definitely not mainstream yet. Let's talk about Bitcoin mining, but keep it simple. Imagine a bunch of computers racing to solve tricky math puzzles. The first one to crack the code gets a reward, some shiny new Bitcoins. This process isn't just about earning coins. It's what keeps the Bitcoin network safe and running smoothly. By using their computing power, miners help verify transactions and make sure everything stays legit. Mining cryptocurrencies takes a ton of energy because it's basically a giant race to solve complex math puzzles. Computers work non-stop, crunching numbers to find the right answer, and that eats up electricity fast. To boost their odds of actually winning some coins, miners often team up in what's called a mining pool. By pooling their resources, they can share the rewards more evenly instead of relying on luck alone. It's like joining forces with friends to split the prize, making the whole process a bit more efficient. Let's talk about what makes Bitcoin stand out. First up, transactions are super fast, no waiting days for transfers to clear. There's also no middleman involved, which means you don't have to deal with banks or payment processors taking a cut or slowing things down. And thanks to the blockchain, everything is decentralized, so the system isn't controlled by any single authority. That's a big shift from traditional money, and it opens up a whole new way of thinking about how we move and manage value. Let's talk about some of the other big names in the crypto world, often called altcoins. Ethereum is famous for its smart contracts, which let people build apps right on the blockchain. Solana stands out for its super fast transactions and low fees, making it popular for gaming and NFTs. Chainlink connects real-world data to blockchains, so things like weather or stock prices can trigger smart contracts. And Dalecoin, while less known, aims to bring new features to the table. Each altcoin has its own unique twist, so it's not just about digital money. It's about what these coins can actually do. When most people hear blockchain, they immediately think of Bitcoin. But blockchain is actually the engine behind a lot more than just cryptocurrencies. At its core, it's a way to record information securely and transparently without needing a middleman. This technology could shake up industries like banking, supply chains, and even voting systems, making transactions faster and more reliable. So, while Bitcoin grabbed the headlines, blockchain is quietly laying the groundwork for a whole new economic landscape. Cryptocurrencies might sound like the money of the future, but they come with some pretty big challenges. First up, their prices can swing wildly, making them risky for everyday use. A lot of people treat crypto more like a gamble than a currency, hoping to cash in on quick gains. And despite all the hype, these digital coins haven't managed to replace traditional money in most places. So, while the tech is cool, there's still a long way to go before crypto becomes a real alternative to the cash we know. Cryptocurrencies have sparked some pretty lively debates about their future. On one side, you've got people who believe digital coins are going to revolutionize finance, making transactions faster and more accessible for everyone. But there are plenty of skeptics, too, who worry about wild price swings and the lack of regulation. Some folks see crypto as the next big thing, while others think it's just a risky fad. So, is it the dawn of a new financial era, or are we looking at a bubble waiting to burst? The jury's still out. Blockchain technology is set to shake up the economy in ways we're only beginning to imagine. It's like a digital ledger that keeps things transparent and secure, which could change how businesses and banks operate. But when it comes to using cryptocurrencies as everyday money, we're not quite there yet. There are still plenty of hurdles to clear before you'll be buying your morning coffee with Bitcoin. So while the revolution is coming, it's not happening overnight. So is Bitcoin and the whole crypto scene still worth your attention? Or are we witnessing the end of the party? That's the big question everyone's asking right now. With prices bouncing up and down and headlines swinging from hype to doom, it's easy to feel lost. Let's break down what really matters when it comes to the future potential of cryptocurrencies. Are we looking at another wave of growth, or is the boom finally over? Let's take a quick trip through Bitcoin's history. Since its launch in 2009, Bitcoin has gone through some wild ups and downs. Think massive price surges followed by steep drops. These cycles aren't just random. They're shaped by things like investor hype, regulatory news, and even global events. By looking at these patterns, we can get clues about what might happen next. While nobody can predict the future perfectly, understanding these cycles helps us make sense of where Bitcoin could be headed. Let's talk about volatility in crypto markets. Unlike traditional stocks, cryptocurrencies can swing wildly, sometimes shooting up, sometimes crashing down, often way more than the news or events would suggest. This happens because there are fewer rules, lots of hype, and tons of people trying to make a quick buck. If you understand these exaggerated moves, you can spot opportunities to buy low or sell high. It's all about keeping your cool and not getting swept up in the drama. Since 2025, things have really shifted in the market. With official recognition from institutions and new laws coming into play, the rules of the game have changed. These updates have made it easier for businesses to operate, boosted consumer confidence, and even attracted fresh investments. The market's dynamics are now more transparent and predictable, which means fewer surprises and more opportunities for everyone. It's a big step forward compared to how things used to run. Let's talk about how big investors, think banks, hedge funds, and even pension funds, have shaken up the crypto market. When these institutions started pouring money into Bitcoin and altcoins, things got a lot more serious. Prices became less wild and unpredictable, and the market started reacting more to global news and regulations. Suddenly, crypto wasn't just a playground for tech enthusiasts. It became part of mainstream finance. This shift means both risks and opportunities, as the market now moves differently than it did in the early days. Let's break down what happens when regular folks are selling, but big institutions are buying. Basically, individuals might decide to cash out, maybe because they're nervous about the market or just want to take profits. Meanwhile, institutions like banks or investment funds see an opportunity and start scooping up those assets. This shift means that the ownership of stocks or other investments moves from everyday people to the pros. It's a classic sign that institutions believe there's more value ahead, even when the crowd is heading for the exit. So why do some altcoins seem stuck, even though they're becoming more useful every day? A big part of the answer comes down to who's actually buying and selling. Institutions like banks and investment funds often wait for clear regulations or proven track records before jumping in. Meanwhile, regular investors can get caught up in hype cycles or fear, making prices swing wildly. Even if an altcoin has real-world value, it might not take off until enough people trust it, and that trust usually builds slowly, not overnight. October's crash wasn't just another dip in the crypto world, it was a game changer. Prices plummeted across the board, shaking investor confidence and forcing platforms to rethink their strategies. Suddenly, risk management became a top priority, and new regulations started popping up to protect users. The way people trade, invest, and even talk about crypto shifted, making the market more cautious and, in some ways, more mature. It's proof that one big event can reshape an entire industry overnight. When markets get shaky, it's easy to feel overwhelmed. But volatility isn't just chaos, it's also opportunity. One smart move is to diversify your investments, so you're not putting all your eggs in one basket. Pay attention to market cycles. Corrections can be a chance to buy assets at a discount, while recoveries are when those investments often pay off. Staying calm, doing your homework, and thinking long-term can help you make the most of whatever the market throws your way. Let's talk about personal responsibility for a second. When it comes to money, economics, or pretty much any big decision, it's super important to do your own research. Just because someone sounds confident or gives advice doesn't mean it's right for you. Blindly following tips can lead to mistakes, so take the time to check facts and make choices that fit your situation. In the end, you're the one who has to live with those decisions. So, to wrap things up, we've covered the main ideas behind this fast-moving economic sector and why it matters. Remember, things can change quickly, so staying informed is your best tool. Keep an eye out for new developments, and don't hesitate to dig a little deeper when something catches your attention. Being curious and cautious helps you make smarter decisions in a world that's always evolving.